Welcome to the deep dive. Today, we're pulling back the curtain on a company you've definitely heard about, NVIDIA.
Yeah, they're everywhere these days.
Exactly. And if you're maybe new to this idea of looking closely at publicly traded companies,
Yeah.
think of it like, well, like checking reviews before you buy something big, right?
hmm
We're digging into NVIDIA's numbers, its tech, what the experts think, try to understand its story and, where it might be going.
And we've got a whole pile of information here. Analyst ratings, financial data, news analysis, lots of different angles on NVIDIA.
Right.
Our job today is basically to guide you through it, pull out the really important stuff, and hopefully do it without drowning you in Wall Street speak.
Yeah, let's try and avoid that. Think of it as the essential guide, maybe with a bit more context.
Exactly. The mission is to make understanding NVIDIA, well, maybe even interesting, not just informative.
We want you to get a real feel for the company based on what the people who study this stuff are actually saying.
And just so you know what we're working with, we've got those analyst reports, the buy, hold, sell recommendations. Think of them as expert opinions.
Okay.
Plus the raw financial numbers, revenue, profit, the real nuts and bolts, and then news analysis that kind of puts everything in perspective.
Got it. So we've got our plan. Let's dive in. First things first. For anyone who just knows the name, what does NVIDIA actually do these days?
Well, at its core, NVIDIA is all about serious computing power. They talk about visual computing, creating images, but also high-performance computing, supercomputers.
Right.
And mobile computing, too. Basically, anything that needs a lot of processing muscle, especially for graphics or really complex math.
So it's way beyond just making graphics cards for gamers now.
Oh, absolutely. I mean, the graphics part, GeForce for gaming, Quadro for professionals, even some car infotainment stuff that's still there. But the real story, the big growth engine, is their compute and networking segment. That's where things get really significant.
Okay. Compute and networking. What falls under that umbrella?
That's where their huge data center business sits. This is the powerhouse for AI and high-performance computing.
Ah.
Then you've got D-Drive for self-driving cars, Jetson for robotics, and Mellanox, it's a company they bought for super fast networking.
Wow.
And get this, in their fiscal year 2025, a massive 88% of their revenue came from data centers.
88%.
Yeah, gaming was just 9%, pro visualization 2%, and automotive only 1%.
That's a fundamental shift.
Yeah.
So for you listening, this basically means NVIDIA's fortunes are now incredibly tied to AI adoption.
Precisely. Their main focus now is accelerating those really intense computing jobs, training massive AI models, analyzing huge data sets. Their hardware does this way faster and more power efficiently than traditional CPUs. They even call themselves a full-stack computing infrastructure company.
Full stack. Okay, let's break that down. So it's not just selling chips. It's like selling the whole high-performance kitchen for AI.
Yeah.
The processors, the software, the connections, everything.
That's a great way to put it, yeah. They provide the chips, the software layers to run on them, and the high-speed networking to link it all together. They want to be the essential platform for AI innovation.
Makes sense. Okay, so they've positioned themselves as central to AI. Let's look at the money side. What do the numbers tell us about their health and future potential?
Well, the financial story is pretty explosive. The reports we have highlight just incredible growth. Revenue more than doubled in fiscal 24.
Doubled?
Yeah, and it's projected to more than double again in fiscal 25. And they're forecasting, 55% growth in FY26 and another 22% in FY27. These are huge jumps.
Those aren't small steps, those are leaps.
Absolutely. And the main driver is that data center business we talked about. In the quarter ending last January, compute revenue there was up 93%, networking up 116%. Crazy numbers.
Wow.
There was a small dip elsewhere, but the overall trend is just up. A lot of this is fueled by the ramp-up of their new Blackwell chips that alone brought in $11 billion in revenue just in that one quarter.
$11 billion. In 3 months. From one product line.
Yeah. It just shows the intense demand.
Clearly.
And the expectation is Blackwell adoption will just keep accelerating, probably overtaking their previous Hopper chips pretty soon as they get more supply out. What's also interesting is who's buying. The big cloud companies are still huge, maybe half their data center revenue in that quarter.
Right.
But you're seeing more regular companies, enterprises jumping in now too, using things like AI agents and what NVIDIA calls physical AI.
Physical AI sounds futuristic. What is that exactly?
Think AI moving into the real world. Robots in factories or warehouses using NVIDIA tech to see and react, automating complex stuff. That's the kind of thing.
Okay, got it. Robots getting smarter. What about profitability? How much are they actually making on these sales?
So gross margins, basically the profit on each sale before other costs, they peaked really high, near 80% in early 2024.
Wow.
They moderated a bit down to the low 70s recently. But the thinking is, as Blackwell scales up, those margins could climb back into the 70s again later in 2025.
So even with new tech costs, they expect profits to stay really strong. And what about actual cash? Free cash flow? How's that looking?
Free cash flow is the cash left after running the business and investing in equipment. It's money they can use for, well, anything.
Yeah.
And NVIDIA's projections here are pretty staggering. From around $61 billion in fiscal 25, they're forecasting jumps to $99 billion in 26 and potentially $125 billion in 27.
That's a lot of cash. That really underlines their financial power.
It does. And you mentioned other metrics like return on assets, return on capital.
Yeah, what do those tell us, simply?
They're like efficiency scores. How well do they use their stuffed buildings cash to make profit? That's return on assets. How well do they use invested money? That's return on capital.
Okay.
And NVIDIA's scores are fantastic. 57% ROA, 71% ROC in FY25. And importantly, those numbers have been going up. They're getting better at turning resources into profit.
Very efficient. And for stock watchers, there was that recent stock split, right?
Yeah.
And a dividend bump.
Yeah. The 10-for-1 split in June 2024 just makes the share price lower, more accessible maybe. Doesn't change the company's value.
Right.
And the dividend increase was small, only $0.04 per share annually now. But it's a signal, confidence in future profits, returning a bit to shareholders.
Okay, so the financials paint a picture of a company growing incredibly fast, very profitable, and getting more efficient. What's actually fueling all this growth? We know AI is key, but what else?
Well, it really is that relentless demand for their data center stuff, driven by AI everywhere. Blackwell's rollout is huge, obviously, but it's also them selling to more types of customers now beyond just the cloud giants to regular businesses using AI agents, physical AI.
Right, broadening the base.
Exactly. Plus, their push into edge devices, cars, robots, and software opportunities. And they've really sped up their design cycle. They're aiming for new chip architectures every year now.
Every year. That's fast.
It keeps them ahead.
Okay.
And they also talk about future AI, like reasoning models, think DeepSeek needing way more compute power than even today's stuff.
So they're building for an even bigger AI future. They're not just riding the wave, they're kind of shaping it.
You could definitely say that.
Now, the big question with all this growth, valuation. Is the stock price already reflecting all this potential? What are the analysts saying?
Yeah, that's always the tricky part. We saw one report from CFRA setting a 12-month target price of $165.
Right.
Their reasoning involves using a price-to-earnings ratio, a PE, that's actually higher than some competitors because they expect so much growth from NVIDIA.
Right, pricing in the growth.
But interestingly, they also note that this target PE is still below NVIDIA's own average PE from the last few years, so maybe still room to run by that measure.
Interesting. What about other big names like Schwab?
Schwab gives them a B outperform rating, and their percentile rank, 18, suggests they expect it to do better than most other stocks over the next year.
So generally positive.
Generally positive, yes. But Schwab also flags a high outlook for price volatility, so expect bumps in the road.
Right, not necessarily a smooth climb.
No. And you see various PE ratios bandied about based on past earnings, future estimates, and price-to-sales ratios. You compare these to NVIDIA's history and to its peers to kind of gauge the current valuation temperature.
High growth, high potential, but maybe a bumpy ride. Sounds familiar for tech leaders?
Yeah.
Okay, let's shift to the tech itself. What's actually coming out of their labs? What's next after Hopper?
The big one right now is Blackwell. It's positioned as a major leap. It's designed as a whole system, GPU, CPU, networking, software working tightly together, which should boost their revenue per system sold. But the key is performance and efficiency. They're claiming huge gains over the H100 chip, like 4 times faster for AI training, 30 times faster for inferencing. Yeah, massive. And they claim a 25 times lower total cost of ownership. These are potentially revolutionary numbers, not just small steps.
Those kinds of leaps could really change how AI is developed and deployed. What's the roadmap after Blackwell?
They're moving incredibly fast. After Blackwell, expect Blackwell Ultra in late 2025. Then the next big architecture, codenamed Rubin, in 2026.
Rubin.
Followed by Rubin Ultra in late 2027. And they've also announced their own CPU called Vera, designed to pair with these future GPUs.
Wow, they're really planning ahead.
Absolutely. And the performance targets for these chips are just astronomical. They're talking petaflops, quadrillions of calculations per second.
Petaflops. It's hard to even imagine that kind of speed. Is it just about the processors themselves?
No, not at all. Networking is critical too. Their next-gen switches, Spectrum-X and Quantum-X, use silicon photonics, basically using light for data transfer inside the system.
Faster connections?
Much faster, much more scalable, essential when you're linking thousands of GPUs together for giant AI tasks.
Right.
And then there's software like NVIDIA Dynamo. And they keep pushing in automotive and robotics partnerships with GM, their Halos platform for cars, Isaac GeoRN1 for robots.
So it really is that full stack approach, chips, networking software, targeting specific applications. They seem determined to dominate accelerated computing.
That certainly looks like the goal.
Okay, but no company is without risks. What are the potential clouds on the horizon for NVIDIA? What keeps them up at night?
Well, a really big one right now is geopolitics, specifically China.
Ah, yes. How significant is China for them?
It's pretty significant, around 8% to 10% of their data center sales. So any major disruption there hurts.
Okay, that's a decent chunk. What are the specific worries?
New U.S. export rules. They now need licenses to ship their advanced H20 chips and some other tech to China.
Right, the restrictions.
Yeah, and because of this, NVIDIA expects to take a big charge, like $5.5 billion, for inventory and purchase commitments they might not be able to use. That's a direct hit. And then there's always the risk these rules get even tighter. Maybe even a full ban on GPU exports to China eventually. That would be a major blow.
Definitely.
Plus, these restrictions might actually help Chinese competitors, like Huawei, get stronger in their home market because U.S. tech isn't as available.
So lost sales and potentially stronger local rivals. That's tough. What about tariffs? That's another global trade worry.
Tariffs are complicated, always changing. There have been some recent exemptions, but new semiconductor tariffs are still possible. How bad would they be? Opinions differ. Something big companies could just pass the cost on. But there's an interesting twist with China's policy. They're apparently now basing tariffs on where the chip is made, not designed. This could actually help a fabless company like NVIDIA, since their chips are mostly made in Taiwan.
Ah, so they might dodge some of that.
Potentially. But it could hurt others, like analog chip makers, think Texas Instruments, Analog Devices, even Intel, who have factories in the U.S. but sell a lot in China.
That's a crucial detail.
Yeah.
So the impact varies hugely depending on the company's model. Okay, beyond geopolitics, any other major risks?
Yeah, a few others. There's always the risk that companies take longer to actually make money from AI than everyone hopes.
The monetization gap.
Right. All this investment needs to pay off eventually.
Yeah.
There's also a slight worry maybe the big cloud guys built too much capacity.
Oh.
Overinvestment. The chip industry is famously cyclical too. Ups and downs in demand are normal. And while data centers are huge, NVIDIA still relies somewhat on consumer electronics, which can be volatile. And finally, they just have to keep spending massively on R&D to stay ahead. Any slip there could hurt them down the line.
So a compelling growth story, but definitely facing some serious headwinds and uncertainties, especially on the global stage. Okay, let's wrap up with what the pros think overall. What's the general vibe from analysts covering NVIDIA?
Overwhelmingly, the consensus is buy. The vast majority of analysts tracking the stock recommend buying it, far more than hold or sell.
Okay.
Wall Street's average earnings forecast is looking pretty healthy, too. For fiscal 26, around $4.42 per share, growing to about $5.67 in fiscal 27. That's the average, of course. Individual estimates vary.
But the trend is clearly positive in their eyes.
Yeah.
How does NVIDIA look compared to its peers, other chip companies?
You can compare them on lots of things. Recent stock performance versus AMD or Intel, for example. Valuation metrics like the PE ratio.
Yeah.
And return on equity, how well they use shareholder money. On that score, NVIDIA looked incredibly strong in FY25, like 119.2% ROE. Way higher than many peers, showing really high profitability.
Very strong performance relative to others then.
Yes. And you also have ratings from firms like Morningstar, Argus, Reuters. They all provide different perspectives, but generally paint a positive picture compared to many competitors right now.
So analysts are mostly bullish, emphasizing the growth, but wise investors should still weigh those risks in the valuation, right?
Absolutely. It's a strong consensus, but not unanimous. Different analysts emphasize different factors, naturally.
Okay, let's try and tie this all together. Our deep dive shows NVIDIA is really at the heart of this accelerated computing wave, especially AI. Phenomenal growth, mainly from data centers, and a really exciting tech pipeline with things like Blackwell and beyond.
But
But yeah, facing pretty significant hurdles. Geopolitics, especially China trade issues, are a major one.
that sums it up well. We've seen the incredible scale of their projected growth, the power of new tech like Blackwell,
And also how complex global trade can really impact even a tech giant like this.
It's been fascinating to unpack. Really shows how tech, finance, global politics are all tangled up now.
It really does. And maybe leaves us with a thought for you, the listener, to consider.
Go on.
Given NVIDIA's central role in AI and all these factors swirling around, how might things like future AI ethics debates or new regulations or even bigger shifts in where tech gets made globally, how might those things change NVIDIA's path and maybe the whole investment picture?
That's a great question. Lots to think about there. Definitely worth pondering.
For sure.
Okay, fantastic insights. Thanks for joining us for this deep dive. We'll catch you next time.